friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm Dave. This is the Edge Report, where I quantify specific opportunities in stocks, ETFs, crypto, and occasionally beyond. Today, as I record this, it is nearing the closing bell on Wednesday, April 8th. And of course, following the ceasefire announced Tuesday night, we are seeing stocks gap sharply higher today and often come back following their opening print, but nevertheless holding much of their gains. Today, I quantify in this report a technical scenario matching these conditions. Stay tuned. Before I get into today's analysis, a quick note on the REKTelligence score. This is an objective function, which just means it's a unified score across a lot of dimensions or metrics, including profit factor, win rate or hit rate if you prefer, edge quality, return efficiency, how fast is capital turnover, and drawdown risk. So all of those are baked into the score. 0 to 100, higher is better. While not every stock will meet the conditions I'm about to lay out by the end of today as I record this on Wednesday the 8th, many will. So I'm going to feature some of the top performing equities in the mostly mega cap space for you to take a closer look at. The conditions are the stock gains greater than or equal to 4% in one day. And secondly, the volume is at least 2 times the average daily volume of the past 3 months. Very simple technical conditions. The naive exit is simply a 3-month hold. I say naive because obviously it's a very simple exit. There are many more sophisticated exits you can work with, but this provides a nice baseline to compare. And the query sizing for all of the stats you're about to see is basically 100% equity, technically 99.9 in Pine Script to avoid any missed signals. But realistic sizing would naturally be less for most traders, but again, simple query to get you thinking about momentum in some of these stocks ahead. Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework, backtesting, strategy development, validation, real edges with full code, not hype. Links in the description or head to my Substack at REKTelligence. Now back to the show. All right, I'll start with Wells Fargo, the year 2000 to the present. There have been 20 instances of these conditions. Hit rate is 75%, meaning 15 out of 20 profitable. The profit factor, 3.76, that is very solid. Of course, it's always easier to have a higher profit factor on fewer instances, but nevertheless, on 20 trades, 3.76 is excellent. Average win, 15.31%. Average loss, negative 10.43%. We see the REKTelligence score is 63. Normally, based on what I've just recited, it would be a little bit higher, but look at that real max drawdown, lower left-hand side, 61.63%, incredibly steep. That was during the financial crisis, 2009, in the spring. Let's move on and take a look at some other opportunities. We see Intel under these conditions, 19 instances historically, 73.68% profitable. Profit factor tops 4, really solid. Beautiful looking equity curve. And we see the average trade here, 10.35% in just 3 months again. REKTelligence score 70.8. It is statistically significant, just like the last one, which I didn't mention. Real max drawdown here, 39.81%. That is no picnic, but hardly a 60% and change drawdown we saw with WFC. Let's move on to UAL. We see 32 instances of this setup, 2000 to the present. Hit rate is 68.75, 22 out of 32. Profit factor 9, topping 9, really impressive. Average trade here is 18.17%. Over 3 months, REKTelligence score 73.5. Of course, it is significant. And we do see that great financial crisis drawdown here again, this time in October of 2008. Understandable under the circumstances, but pretty sharp. Nevertheless, the other metrics so solid that it does bring up the REKTelligence score into the low 70s. Let's look at Devon Energy, DVN. We see 24 instances, historically awesome hit rate at 79.17%. 19 out of 24. We see profit factor topping 5, really solid. Average trade here, 11.77% in just 3 months, that's 0.187% per day. REK score is 73.5, and worst drawdown was during early COVID. We see AMAT, Applied Materials, 23 instances of this setup, 69.5 and change percent. Hit rate, profit factor 8.844, excellent. Average trade 9.23%, again, of course, in just 3 months. And we see the REK score 76.1. It's significant, and we saw the worst drawdown again during the financial crisis in the spring 2009. We got to Tesla, and we don't have as much data, right? We have 2010 to the present, 27 instances, however, and we see the hit rate 62.96%, so a little bit under what we've been seeing, but the profit factor amazing at 9.273. We see average trade here is just a tick under 20% at 19.99 over 3 months. Our score is 77.9. It's significant. We did see an incredibly sharp drawdown, and turns out opportunity for investors in 2020 in the early part of COVID, of course. Let's move on to LKQ. We see 23 instances. Profit factor 8.327, hit rate 69.5 essentially, and the R score 79.4. It's significant. Real max drawdown only 34.76, and just an excellent profile for this stock. Great looking equity curve. ROST, we're going to expand on this in a moment, but let's cover the basics. 35 instances, 2000 to the present, hit rate 82.86%, profit factor 6.591. Beautiful equity curve here. And of course, we do have more trades or instances to evaluate. The average trade here, 12.17%. R score is 90.4. Of course, significant real max drawdown, only 21.74%, which is just awesome to see. Let's take a deeper look. All right, let's take a closer look at ROST, R-O-S-T, using Strategy Analyzer, which simply takes TradingView's export file, which is an Excel file, and uploads it for greater graphics and analysis, as you'll see. So here's the basic summary. We covered some of this. You can see that it has some additional information, such as annualized return. So with the test or query sizing that I'm using, pretty impressive that this has an annualized return 2000 to the present of 12.44%. That's really pretty astounding, actually. And the MAR is not fantastic at 0.308. That's because of the large drawdown you see here. But average win to loss ratio 1.364, and some other things we could dig into. Let's, though, move on to a scatter plot. Here are all of the instances, all 35 closed trades showing. You can see a little bit more variation in the early part of the test history. That is 2000. That was, of course, a dot-com, the peak of the market, and then the dot-com crash over 2001, 2002, which really resolved with the start of the Iraq War, 2003. The market really kicked in to an uptrend at that time and didn't look back until the financial crisis, essentially. So you see average trade here is shown, and a lot of variation, mostly positive, of course. That explains the high hit rate. Statistical significance is crucial to me. I don't want to trade anything just because it's a pretty backtest. It has to be significant. And of course, that's part of Strategy Analyzer. You can see for ROS, I'll just focus on the p-value, 0.0003. This is showing that the probability of these results by chance is that probability. It's almost nil, which is what we want to see. We want to see strong signal and a essentially 0% chance of these results being noise. I've run Monte Carlo analysis inside Strategy Analyzer, 1,000 simulations, and also sample with replacement. And I get these percentiles. The very top row is not that useful. It's kind of for fun. You can see the very best run out of all 1,000 alternate histories for these results for ROS, 35,000 change percent, cumulative return, max drawdown 0%, and profit factor infinite, because that means no losses and you can't even calculate profit factor. Obviously, not what we should ever expect. Median is useful because now we have the literal middle value, and we can see it resembles the original test pretty closely. Realistic downside and tail risk are what I'm calling the 95th percentile and the 99th. And these are useful because now we're stress testing the results here. And we can see return is still positive. Drawdown is, of course, much steeper. Profit factor, even at 95th percentile, is north of 3 and north of 2 at the 99th. That is pretty solid. And then we see on the bottom row the very worst observed run out of all 1,000. Let's take a look at the distribution. We can see all of that here. All 1,000 simulated paths were profitable. If you see in Strategy Analyzer at the bottom, there's a red text there. It's going to tell you how many were not profitable out of all the runs you ran in Monte Carlo. You see a bit of vertical streakiness here. That's due to the limited number of trades. If we had 100 trades here or 300, you wouldn't see that show up in the scatter plot, but it is very useful to see the actual backtest with that blue square and then the scatter of the other distributions. We can see Monte Carlo of max drawdown, very simple. The dashed blue line is the actual backtest, and the 95th percentile stress tested. You can see where that max drawdown lands. It, of course, is steeper, but not way far out on the tail. If you think Strategy Analyzer might be something you'll use, go to my website and lock in the preferred rate. Details there, tradingfromparadise.com. Again, my website, tradingfromparadise.com. Thanks for watching today's Edge Report. I will be back on Monday with my next All Markets Report. Until then, trade smart, live well, and cheers from the Caribbean.